Welcome back, everybody, to the home stretch. I'm Nina Soden, Alabama real estate agent with the Soden team of Legend Realty.
And I'm Frisby, mortgage loan officer with Victorian Finance.
So today, Kat, we are going to talk about how much money a buyer really needs to bring when buying a home.
Right.
Because the biggest misconception is they need tens of thousands of dollars, 20,000 in the bank, 50,000 in the bank. Is that really true?
No, absolutely not. So every buyer is different, of course. So every situation is going to be completely different from each buyer. But there's different costs, and so let's break some of those down. So the biggest one is down payment, obviously. So there's that old rule of thumb most people only know about is that big 20% down payment, right?
Yeah.
Which, if like you were saying earlier, on a $200,000 loan, that's, $40,000.
$1,000.
And most people just don't have that sitting in the bank accessible.
And right
nowadays.
now in our market, our average home price is about $375,000.
Yeah. So you're talking almost 80 grand then for a down payment. So on different loan programs, there's different, minimum down payment requirements. So the first two, VA and USDA, you could actually come to closing with 0% down payment.
But it's not required. You can
It's not,
do a down
yes, it's not
payment.
required, but it is as little as 0% down on VA
benefit.
and USDA. And then if you're a first-time home buyer with conventional, your minimum down payment is 3%. If you're not a first-time home buyer, your minimum down payment is 5%. And then with FHA, your minimum down payment is 3.5%. So a lot better than
the 20% everybody thinks.
Yes.
Absolutely.
Yeah, so a lot more affordable than you can think.
But the down payment is not the only out-of-pocket expense.
That's right. There's more out-of-pocket expenses. So up front, you will have your appraisal fee, your inspection fee.
Yep.
That you will have to pay out of pocket up
Your
front,
earnest money.
and your earnest money.
If you put it into the contract, it's not legally required.
Yep.
But it is encouraged because it does make your offer stronger.
Mm-hmm. Yeah. So of course your earnest money deposit and your appraisal fee will then be credited back to you, like on the bottom line at closing.
Yes,
so you're not having to pay double for that.
But your home inspection is not. That is just a straight
Yes.
out-of-pocket cost.
Yep, something separate from the actual lending piece
Absolutely.
of it. And then so closing costs are typically anywhere from 2 to 5% of your loan
Purchase
amount.
price?
Yeah,
Or your-
yeah, I would say loan amount just
Okay.
because you're you've got prepaids, which are your escrows, right? So you're paying into your homeowner's insurance, you're paying into property taxes, and depending on the time of the year, some of that could be prorated, right? The property taxes. So if you're buying a home in the summertime, then usually those are prorated for just, the remainder of the year that you have to put into it because the seller is paying
the back
end
everything
of it.
they lived in, they're
Yes,
going to pay for.
Yeah. And then closing costs also covers escrows, the prepaids, the homeowner's insurance, and the property taxes. And then closing costs also covers the title fees. So
The attorneys that handle
the
it.
attorneys that handle your actual closing.
Filing of the title,
Yes.
all of that legal stuff.
Yeah, paperwork fees, all of that. And then you've got a little bit of government fees like recording tax and things like that. And then you've got some lender fees. And then I think that's really.
Well, and then the cost of your real estate agent, if you as the buyer are paying,
Yes,
which
that's true.
that fee is required to be covered by the buyer. Now you can put that into your offer and ask the seller to pay, but it really just depends on how that's negotiated.
Is it more common that the seller pays it, or have you seen more buyers having to pay that nowadays?
So it is still more common, I think, that the sellers are paying it. We're still as agents putting it into the offer, but I have seen that kind of shift a little bit, and either the seller's only now going to pay a portion of it, or I have seen one time in the entire time I've been a real estate agent where the seller did not pay at all.
Okay.
So it is negotiable. The buyer is legally responsible for it. So
Mm-hmm.
if the seller says no, the buyer's responsible for it. So it could add to those closing costs.
Right. And so another thing to point out, now that you mentioned, that's negotiable. So some of the things that that you can shop for versus what you can't shop
Yeah.
for, right? So obviously with your real estate agents, you can shop for your lenders,
Yep.
you can shop for, but your prepaids.
They're going to be there.
Yeah, property taxes, we can't change those, right? You can shop for homeowners insurance, but
For sure.
but you're still, required to, pay that up front in your closing costs as well.
You can shop for your title company,
Yeah.
that closing attorney. They all have different fees. Some of them are set and they're going to be very general, very the same, but then you're going to see that others are more expensive, others are cheaper. So shop around. Look for, is price important to you, or is quality important to you, or is both? Interview those
Yes.
companies.
Which
Just-
we will touch on
Yeah.
in a later episode.
Absolutely.
But so we've talked about a lot of costs.
So, but can the seller help with those costs? Kat?
Yes,
'Cause this
yes.
is important to understand.
Yes, so that's what I was going to mention, was that this is not all on you.
Right.
You do have options. So you can get the seller to help with seller concessions. Now, each loan program has certain limits on how much seller concessions you can get, but just reach out to your lender, ask them. They'll know how much you are allowed to get on each loan program, but they can help with closing costs. And that goes back to everything that we just mentioned: the title fees, the lender fees, the prepaids, escrow, even discount points. If you're
Yep.
wanting to buy down your rate to get a better rate, seller credits can go towards that as well.
You
So
just, like she said, you have to be mindful of the percentage they're allowed to cover, and it's negotiable. You can ask for it all,
Right.
right?
Yep.
Up to that percentage, but the seller also has the right to come back and counter. They can either accept it, counter it, or reject it.
right. So, work with your realtor
Mm-hmm.
when you're, making that
Offer.
offer. And then, before making that offer, obviously, ask your lender what those limits are, because you don't want to ask for more than you can actually
Yeah.
get, because then you're leaving money on the table, and we don't want to do that.
Absolutely.
So, but a couple of other, so all of those closing costs that we just talked about, you can definitely ask for in an offer, and have that covered. So, I mean, I've even had, some situations where clients, who are getting a VA loan, 0% down,
down, yeah.
and they were able to have the seller cover all closing costs, and so they're literally
Zero money to the table.
coming to closing with nothing out of
Yeah.
pocket. So it is it common? No, but it is possible
Yep.
that you can come to closing with zero money out of
Yep.
pocket. But there are some other expenses that sometimes people forget about as well. So we've already talked about, inspection, earnest money, but you're moving. There's moving expenses.
Yeah, the trucks that either you rent or that you hire somebody to come in, the boxes,
And just even taking the time off of work.
yes,
to
absolutely.
have to
That's
move.
it's either an unpaid leave day or you're
You're
taking your
using-
holiday
yep.
time or whatever that is. So there are expenses beyond that you're not going to recoup. Right? Utility turn on.
Yes. Utilities can be some require deposits.
They can, yeah.
So those can be pretty expensive as well.
Yeah. Any initial moving, cleaning or maintenance or repairs that have to be done that were not negotiated within the contract, those could be expenses right out of pocket. We did talk about the seller concessions,
Yes.
but builders also do concessions.
Yes.
So if you're looking at new construction, a lot of builders have incentives that kind of entice the buyers to come to their neighborhoods.
Yeah.
they range, right?
Yeah.
There's a big range, and they're different from builder to builder, and sometimes they're different from neighborhood to neighborhood within a builder community. So you're thinking things like paid closing costs, interest rate buy downs for a set lower interest rate than you would get elsewhere if you were buying a reused home. And then you've got things like blinds, refrigerators.
Yeah, like upgrades and things like that, right? Yeah.
Washers and dryers, fences. Not all builders will do all of those incentives, but at given times during the year, if their inventory is high, they might give a little
And
bit more.
Yeah, they're wanting to get them off the market.
Yes,
yeah.
absolutely.
So work with your realtor, and
See
yeah.
if new construction might be the right choice for you.
Yes. And then so with all of that said, there are a lot of expenses to, buy a home. Yes.
Yes.
A lot of upfront costs, a lot of out of pocket costs. But, I guess the takeaway for that is don't spend every single dime that you have
Yeah.
on just closing or on just your down payment, because you're going to need the extra funds.
Home ownership comes with surprises, right? You might think, oh, we've got everything we need to move in, and then you get everything in
Yeah.
and you realize something big is missing, right? The couch doesn't fit in the living room,
Yep.
or the bed is too small, or your refrigerator breaks down, or the HVAC breaks down.
Yeah.
I mean,
Or you have pets and you need to build a fence.
Yes.
You
There
know,
are so
yeah.
many different expenses that unless you are being completely transparent with your realtor, with your lender, some of those things might not come up as needs, and you might miss it in your home search. So definitely talk openly about all of those things, pets, kids, whatever you might be in need for you guys. And if it's space, if you're getting a bonus room you've never had, be thinking about the fact that somehow you're going to furnish that bonus room as well.
Got to fill that up somehow, right?
Got to fill it up.
Yep. So don't assume you can't afford to buy. Like I said, there are some cases where we can make things work where you do not have to bring anything to closing, but you still have all of those outside, expenses. You talk with your lender and your realtor early on, like
For sure.
Lena was saying. Be open and honest and transparent about what your plans are, what your expenses are,
What your needs
are, and we can help you with that. So you might actually be closer to buying than you really think.
But it is never too early to start talking with your realtor and with your lender. Kat in particular, but really any lender that you decide to work with. But if you are talking to her, whether it's 3 months out, a year out, 2 years out, your lender is part of your team, and they help you figure out when the right time is financially. So if you don't think you're ready right now, she may be able to give you a different option or a different viewpoint that leads you to a sooner date.
And help create a plan to get you to that target date.
If you truly are not ready,
Yeah.
help create that plan to get you ready. So you're not just doing things you read on the internet or heard online, or a friend of a friend of a friend said, oh, do this.
Right.
So,
Yeah. So,
all right. Well, if this was of any help to you, please like this video, subscribe, and share it with a friend who might be looking to purchase a home.
I'm Kat Frisby with Victorian Finance.
I'm Nina Soden with the Soden team of Legend Realty.
We'll see you next time on the home stretch.
Bye, y'all.
Bye.